Owning a car is a very essential part of life. Yet, you could lose your car and still owe the bank thousands of rands. Hola, Chomie. This is Insurance Breakdown South Africa. Today, we are lifting the bonnet on one of the dirtiest little secrets in South African car insurance, and that is retail value versus market value versus trade value, and how depreciation is actually slowly bleeding your payout behind the scenes. What you don't know can cost you tens of thousands of rands at claim stage, be it an accident or a theft. So under the Phase Act, you have the right to full disclosure, and that means your insurer or broker must explain which value basis your policy uses and what that means at payout. They will often say, "Don't worry, sir, you're covered." But you should worry, and you have the right to choose retail value even if it costs you a little bit more monthly. Alright, so let's get into it. You have three main value options when it comes to insuring your car in South Africa. There's retail value, which is the highest in the dealer's selling price. Then you have market value, the average of what it's selling for privately, let's say. And then there's trade-in or book value, that's the lowest in what the dealer will offer you. Now, most policies default to market or trade value to save the insurer some money. And you're left thinking you're covered. But come payout day, guess who's taking a knock, buddy? It's you. Most people find out the truth when it's already too late. I spoke to someone who insured a 2016 Toyota Hilux at market value and it was stolen. This is South Africa after all. The payout, 190,000 rand. The dealer wanted 260,000 rand to replace the car. He ended up in debt for a car that he didn't even own anymore, he couldn't use anymore. So when your broker says comprehensive cover, stop them and ask, at what value? Even ask simple questions. What does that mean exactly? Because comprehensive just means that it covers all types of damage, not that it covers full cost to replace your car. And that is what you want, to be put in the same position you were in prior to that incident happening, at least as close as possible. But brother, some people like to say the system is broken. It's not really broken. It just works better for people that know what the rules are. So here's your move. Number one, check your insurance schedule. People just don't check the insurance schedule. You don't know what you're covered for. You don't even know if your name is spelled correctly or incorrectly. So double check your policy schedule. Ask the questions where you don't understand. Two, look for some insured. Are you covered for market, retail, or trade value? And if you're covered for a lesser cover, ask for a quote on an upgrade and then make your decision. You don't always need the most expensive cover. You just need to know what you're buying. What are you in for? And that's the real power. So in a nutshell, audit your own policy, right? Audit your policy and ask your insurer the questions where you don't understand. Just a quick disclaimer. This channel is for educational purposes only. This does not constitute financial advice. If you need financial advice, consult a registered financial advisor or consult your insurer. Lastly, if you learned something today, or if you've got a suggestion for a topic, you got a story to share, you got a horror story to share, I'd like to hear about those. And Chomie, remember, you're the decision maker here, not the insurer, not your broker, and certainly not the agent. Take control of your policy.